My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make you some money. My job is not just to entertain, but to educate, teach. So call me at 1-800-743-CBC. Tweet me at Jim Cramer. You can always tell when we're due for one of these selling squalls. You just need to check out my Twitter feed. See all the ridiculously speculative names people are hoping I will mention or pump or something. The unknown companies I get asked about in the lightning round. Same deal, no earnings, but white-hot stocks. These are textbook signs of what we call froth. That's what this is. It's froth. And you know what? All the froth got crushed today. Dow plunging 517 points, S&P plummeting 1.75%, NASDAQ nosediving 1.55%. Not bad, huh? For an amateur, right? Okay, so what's become too risky here? Let me give you an example. Last night, kind of cool. We had Novavax, one hottest stock in the market. Vaccine developer that's working on something for COVID-19. But geez, the stock had just run from 18 to 40 in 2 days. I can't recommend something like that. That's this. You know, Novavax is this. Okay, I mean, like, good guys, but it doesn't matter. It actually managed to rally today. Maybe Novavax wins the vaccine race, but if they don't, the stock is going to get eviscerated. If you want a vaccine story, I'd much rather have you in something that's diversified. Glaxo, Pfizer, J&J. And look, the same goes for early-stage biotechs with potential cancer cures, antivirals, monoclonal antibodies, treatments, anything related to Ebola or flu, except for Regeneron. These companies tend to have little in the way of profits or even revenues, which is why their stocks are very much at risk when we get one of these sell-offs, and they don't come back. These stocks are way too hot. If you own one of them, remember, when the froth gets over the edge or ruins my Ferragamo tie, it's time to quit. What else can't be touched? The banks. I know. Oh, did they look cheap? Holy cow. People come on and say, hey, you want value? It's the banks. Now, I know they got big yields, but this group got shelled today for a reason. I want you to look at Wells Fargo. It'll hurt your eyes. Maybe you come with some Visine or something. It's a good franchise. Terrific new CEO, Charlie Scharf. The backing of Warren Buffett. Meaningful insider buying. Bountiful 9% yield. Seems pretty darn enticing, doesn't it? Wrong! Wells Fargo has three problems. While they have a loan book that's highly diversified, the fact is they don't make much money on those loans right now. They're looking at a lot more defaults, and ultra-low rates mean they can't make as much money on your deposits. As the stock goes lower, I start worrying something's very wrong here. Maybe too many businesses are closed that owe them money. Maybe they're giving forbearance to too many customers. Maybe the dividend is as safe as it looks, especially because a high-ranking Fed official just yesterday talked about preserving capital through cutting dividends. Well, that's all we need to see, right? I mean, would you just be like, it would be... No, thank you. At the end of the day, you do not want a credit risk in your portfolio during a recession, or let's call it the D word, a depression, if we don't open the economy soon, or if we open it too soon and we get another COVID wave more powerful than the first. Scylla, Charybdis, Google it. As crazy as it might sound, do you know what I'd much rather own? PayPal, up 33% for the year, including $2.70 today, than Wells Fargo, down 58% for the year, including a 6% loss in today's session. If PayPal stock goes down, I feel confident enough to buy more. If Wells Fargo keeps going down, I'd be terrified. It's not just Wells. I read a bunch of stories today about how PNC sold off its precious stake in BlackRock this morning, the huge and fabulous asset manager, raising $14 billion. They say to fund, the articles say, to fund some acquisitions in the banking space, shrewd acquisitions. The bankers who handled the actual BlackRock offering placed 28.8 million shares at $420. BlackRock stock then rocketed back to $485, $65 profit if you got in on that deal. But the stock of PNC dropped more than $3. I think BlackRock's a much better investment than any bank PNC might want to buy here. If we don't get a V-shaped recovery, I'm betting these guys need every penny they can scrape together. In fact, that's why I'm betting why they sold to BlackRock. And after the risk Fed chief Jay Powell outlined today, I don't think we're going to have a V-shaped recovery, which means you can't buy a bank stock. I don't think we have a yellow. I don't even know if we have a swoosh. I don't even know if we have one. Maybe we get one of these. And then the Fed will no doubt begin to question their dividends. We can do it on Zoom. The airlines might seem tempting with their. I know this is like actual in person in my set. This is not my home with some green. This is where I live. All right. Some stocks seem tempting when they're hitting new lows. But remember, the airlines, that's a good example, they owe the government a fortune. Their earnings are going to be terrible as long as people are reluctant to fly, which they are. Business travel might be drying up permanently as more and more office people figure out how to use Zoom. What really makes you nervous about the airlines? Well, there's one person who is the most at stake and needs the airlines to be in the best shape. One person who needs to get them to be really jazzed about their business in the future. His name's David Calhoun. He's the new CEO of Boeing. He has his finger on the pulse of the industry. He knows who can pay and who isn't doing well and who is. Well, yesterday, Calhoun went on the Today Show and said that a major U.S. airline will go out of business. He's so negative, he's willing to go on that network television and predict that one of his prime customers could be a goner. I mean, who the heck wants to take a chance with a company that might go bankrupt? Calhoun didn't specify which one, so now all the airlines were suspect. Their stocks got slammed. It gets worse. Even if people are willing to fly, you can't fly at maximum capacity without putting people in danger right now. At least that's what obviously the tourists think. No more full planes. And many countries have instituted 2-week quarantines for travelers from overseas. Oh, that's a vacation buzzkill. Calhoun says we'll be lucky if traffic's back to 25% by September. Maybe by the end of the year, we approach 50%. This is the CEO of Boeing, for heaven's sake. He's the most negative guy I've ever seen. He's pretty much telling us the airlines are toast. No wonder even Warren Buffett, Mr. Buy and Hold, bailed on the whole group. By the same token, anything travel and leisure-related is a sell. At least Calhoun did not slam the hotels, and he didn't slam the restaurants, and he didn't slam the retailers. So, hey, maybe we're okay. You might be tempted by the oils here. Another thing that Calhoun didn't slam. After all, the price of crude bottomed at minus $37 a barrel, right? That was pretty much of a low point. I say, so what? The industry's in better shape now that Russia and Saudi Arabia have cut production and economies around the world are opening up. But I can count on one hand the number of oil companies that can actually turn a profit below $30 and we're at 25. I don't trust any of their dividends except for Chevron. The master limited partnerships are particularly treacherous. They're slashing their distributions left and right. Speaking of cutting distributions, how about the real estate investment trust? Sold. Kimco, Tanger, EPR Properties. They've all done it. Tip of iceberg. Hey, you know what? The analysts actually cheered when Simon Property said it was going to pay its dividend. I mean, I'm not kidding. The analysts were incredulous. Now, Simon's got great management, but I worry that maybe even that's not enough. You can skip the whole group. These REITs are getting killed because retail's getting killed. Aside from Amazon and a handful of big box stores, Costco, Target, Walmart, Home Depot, and Lowe's are out throwing Dollar General. Everybody else is being obliterated. Without a bailout like the $3 trillion stimulus package that House Speaker Nancy Pelosi told us here last night, I fear that most of these smaller stores almost all of them are doomed. I'm not even throwing in the restaurants because it seems too self-serving. They're all too self-serving. How about the cyclical smokestack stocks? Some of these companies are giving you very useful signals, like Emerson reported monthly trailing orders say down 12%. I like to watch 3M because it has its fingers in so many pies. It fell $6 today, 4.3% yield. Suboptimal. Caterpillar's rolling orders are always worth keeping an eye on. The retail sales plummeted 22% in the last 3 months, 27% drop in North America. Ouch! In a serious downturn, I'm worried about the balance sheets and the dividends of this group. You know what would save all these troubled stocks? Bingo, a vaccine. Yet the prospect of a vaccine seems more remote by the day. Officials keep talking about 12 to 18 months, but they were talking about 12 to 18 months in March. So doesn't that mean like 12 to 18 months? If it was 12 to 18 months in March, shouldn't it be like 10 to 16 months? No, they're still talking 12 to 18 months. So what is worth owning here in that small universe of what's left? You want stocks that can thrive in a world that looks a lot like today, because that's the world we live in. And that's why I created the Cramer COVID-19 Index. It's $11 trillion. I left out Target. You had to be an outperformer. Put Target in there. I'll take something else out. These stocks have been roaring in recent weeks. They all got slammed today. They got hit with the froth. People thought they were frothy. That's okay. They will get unfrothy. Did you notice how, like, after it gets unfrothy, the good ones, they go back to being like mochachinos? All right, now, the bottom line. These kinds of sell-offs usually last about 3 days, okay? And if a Fed governor talks, it's going to be 4 days, because those guys, or Fauci, Fed governor, Fauci should be a Fed governor. Anyway, this one started yesterday. I'm betting things begin to improve tomorrow around 2:30 when you'll have most of the momentum guys out and the margin calls out. That's when the best rallies tend to begin. It's going to start with the food stocks, okay? It's not going to start with the semis. It doesn't, and then if it doesn't start by 2:30, wait until Friday. Again, watch the food stocks, watch the drug stocks, and then you can slowly start buying your favorite stocks in the Cramer COVID Index, because they're the kind of names you can still confidently pick up into weakness. Don't buy them all at once, because that would be stupid. Right now, that's the best you can ask for. Do a little whipping up here while we get Thad in my old home state of Pennsylvania. Thad.
Hey, big time booyah from Pennsylvania. Hey, good. And March, I'm the spin-off Carrier Global. I was able to initiate a position. Last week they released earnings. Sales were down 10%, but the stock did have a positive pop. What do you think about this air handling company? Is it a cool stock to own?
I thought Thad might be in there from the sound of this. He's on Zoom Sound. I mean, unbelievable. I'm worried. I think the Carrier, the one I like in that group is Raytheon. It's down really badly, got more than 3% yield. It's really an inexpensive stock. I can't believe it's come down this much, but everybody hates everything and everybody's miserable, and it's always Tuesday. Have you ever noticed? Every day's Tuesday. Anyway, we were due for one of these sells. I think things can improve. Maybe it started as early as 2:30 tomorrow. We needed to get rid of the froth. Stop asking about these joker stocks, please. On Mad Money tonight, my exclusive with Cisco, fresh off its report, not a joker stock. Then semiconductors are the backbone of the tech-driven economy. As the demand increases for smartphones and PCs and stuff to make it so your home looks like your office, which one should you consider? Let's go off the charts to find out. And how should you approach the utilities in this uncertain market? I'm sitting down with the CEO of the utility that I pay a fortune to. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.